I was the special guest.
Yeah. All right. Welcome, everybody, to the Enphase Falling Apart podcast. Gabe was right.
Gabe was right. Where's the cowbell? Gabe was right.
No cowbell. We have a special guest today. Hold on before he joins us. Hold on a sec. Let me see. Well, you're one of the special guests.
Is it Kris? Who's the special guest? Is it Carlos? Carlos is not. It's his channel.
We have a young Enphase investor joining us right here. Come on down.
What's up?
Aww. What's up, man?
What's up?
How many shares of Enphase you got so far?
20.
20.
I'm broke.
That's close to as many as I got. You're outpacing me.
Yeah, I just told him he had 20. He didn't realize how many he had. What else do you have?
Tesla.
Wait, first you want to introduce yourself? Who are you? Can you tell the audience who you are?
I'm Roman.
I'm like, don't tell him everything.
Do you like that name?
Yeah.
You know, I saw a video. Your dad posted a video in the WhatsApp group this weekend of you saying some stuff. It was a Cheesecake Factory. It was interesting. So,
you shouldn't watch that again.
This is the kid who talks about things he shouldn't talk about.
Nikolai started it.
Yeah. All right. So anyway, you got anything else to say to these fine people watching? I think we got like 20, 30 people watching right now.
Okay.
Well, let me ask you one question. Do you like learning about investing in stocks, or you get bored of it when your dad talks about it?
A little bored every once in a while.
He'll be happy in 20 years, though.
He'll be happy in 5 years. He'll be happy.
Well, yeah, here's the most important lesson I ever taught him. If we were to do one lesson before we talk Enphase, well, let me ask you, what do you buy and what do you not buy?
I don't buy liabilities and I buy invested.
Well, what are they called?
Assets.
Boom. Okay. All right. Thank you. Thank you.
Roman, just remember.
Hey, kid.
Roman, I want you to look up something called Palantir tonight. Just get some thoughts on it, and then you can talk about with your dad later. Okay? It's called Palantir. Okay,
Bad.
Look it up later.
Yeah, they're coming to Kazakhstan. We heard. All right. See you later.
Thanks, man. Appreciate it. Have fun doing homework.
Hold on a second. All right, give me 1 sec. I'm gonna make better sound for me. All right, still hear me?
Yeah.
All right, cool. So that was
holy shit, Vitaly. It's at 184.
So I just bought as soon as you told me. You actually showed me in our WhatsApp group that it's down. I don't even know what's going on, honestly. Obviously, they've announced something bad.
They beat EPS by 14%. I'm not sure why the market's reacting.
Maybe Q2 is not looking so good. So we actually have not. Yeah. I have not heard anything, but immediately I saw it in the 180s. I went and bought some shares. I'll post it on the Discord where I have our trades and all that. Not right now, but a little bit later when we have time. So I just wanted to make sure I get it in the 180s again. And if it goes lower, I keep saying it, let it go lower. It's okay.
This is interesting. You want to pull it up the results so we can theorize why it's going down? I don't know.
Yeah. Do you have a page or you want me to look
I
at
have it. I can show it. So this is what we got.
Missed on sales. There you go.
So revenue. What is the revenue growth? I was trying to calculate it because revenue growth seems still pretty amazing.
Well, what was it this quarter? I don't know. So we have to look at that.
That's what I'm trying to look at. That,
Q1 over Q4. There you go. Revenue, 726.
That's GAAP and non-GAAP. So I'm not sure that's exactly the right one, but it should be.
Let me see.
So revenue of 726 million. So they put up about 730 million in the quarter.
Well, it looks like quarter over quarter that the growth is low. Maybe that's the issue here. 726 over Q4. It says it's only
it's like less than a percentage of growth, but I don't know. Are they measured quarter over quarter? They're measured year over year more.
Well, no, quarter over quarter counts. If you're growing 70%, you're still supposed to compound at what, 15 to 20% a quarter, right?
That's the reason.
So the reason. This could be the reason. Absolutely.
That's absolutely the reason. Yeah. There you go.
Let's read it. Financial. Go up again. Go up again. No, up. All right. So we reported quarterly revenue of $726 million in the first quarter of 2023, along with 45.7% for non-GAAP gross margin, which is still amazing. We shipped 4.8 million microinverters, or approximately 2,000 megawatts DC and 102.4 megawatt hours of Enphase IQ batteries. Okay, so I want to see what the battery business is growing. I don't think that's growing as fast, by the way, as in terms of the microinverters. Quarterly revenue of $726 million. So that quarter-over-quarter growth obviously has slowed down. These rates are having an impact. So I think Kris is right that at this point we can tell that rates are definitely having an impact on slowing this down. GAAP gross margin of 45%, non-GAAP gross margin of 45.7%. That's crazy. Isn't that for a hardware company?
Yeah, that's insane.
GAAP operating income of $167.7 million. Okay, GAAP net income of $146.9 million. We'll have to compare it to previous year and previous quarter, but I think it's the quarter-over-quarter thing that's basically tanking them. GAAP diluted earnings per share of $1.02, non-GAAP diluted per share of $1.37. Let me see what was expected. Does it say what was expected?
No, not on this one.
Let me just check.
This is their specific one.
And we have 7 minutes till the actual call, by the way. So I have it queued up, but I'll wait till we're ready to go.
Yeah, so they missed on some sales. Quarter-for-quarter growth is not the best.
187.93 right now. It's $188.
Yeah, I don't know. I think it gets eaten up. I don't think it. I don't. Do we see 175? I don't think so. I don't know if that happens.
I mean, honestly, like there is no reason why they can't get smashed. I keep saying that.
Yeah.
Why can't they go to like $150, $140? Like, so there's no reason they can't. They're a growth company. They're valued richly. We know that. And if they do slow down this year because the rates are high, I don't know. I think it's understandable because if people are going to wait, I don't know how much they're going to wait, but if people are going to wait to get solar and you don't want to pay the 10%, 12%, and you're thinking next year I can get it for 6%, it's not a terrible financial decision. Do you know what I'm saying? To wait a year.
Yeah.
The thing I keep saying is that even if you delay this a year or two, you're going to get solar. It's not like they've lost a sale. You know what I mean?
Yeah.
So if someone's not buying it this year and it's just tanking this year, it's an opportunity to buy a company like this, along with Tesla, by the way. And you're still going to buy solar next year because if you're already in that process and that mindset, by the way, it took me 3 years to get solar. I didn't get it day one, just FYI.
Yeah.
So it wasn't like I knew I wanted solar, but I did a lot of research before I actually pulled the trigger. And it takes a couple of years to do that. So once again, are we delayed in our everything mooning? Yeah, maybe. But
what is your quick opinion on owning energy stocks during quantitative tightening? Like, is that a generally good thing?
Well, okay. So right now, look, if you just talk about rates, it's not a good thing. The thing that I keep going back to, are these rates in a vacuum? Meaning, like, is the cost of energy, is that all going up in tandem? So it's not in a vacuum, the rates alone. So someone who's paying for oil right now for their SUV, right? And they're paying $80, $100, and they want to pay $10 like I pay, or $15 to charge up their EV. They're gonna do that math, and eventually it makes sense. But maybe it doesn't make sense, like even Kris discussed. Maybe it doesn't make sense at 12% or 10% interest rates. But maybe at 7% and 6% and 5% as it comes down, and because these loans are higher than the current Fed funds rate. So if the Fed funds rate is what, 5% right now, somewhere around there?
Around basically, yeah.
So you would be paying for solar maybe 8, maybe 10, depending on your credit. So you follow me?
Yeah.
So, but having said that, like if you're paying for oil higher, if energy itself is not cheaper, and I look at my own oil prices, like I paid to upgrade my infrastructure in terms of a heat pump. I installed a heat pump. We talked about this. And I did it because the long term of the heat pump is what makes sense, not the day one you put it in because you're spending $14,000 or whatever, right? That doesn't make sense. But if you're amortizing it over multiple years, 5 years, 6 years, 10 years, that's when it starts to make sense. So if you're short-term minded, this never is going to make sense because paying $40,000 for solar, even with the tax credit, is not going to make sense to you. You have to be a little bit mathematically conscious and paying attention to this. When does it happen where it makes sense for everybody? I don't know. But I think we're on that trajectory where 5 years from now, 6 years from now, this makes sense for everybody. You know, like EVs will make sense for everybody at some point.
No, look, it looks like an opportunity. I want to pick up more tomorrow if we can get it even. I mean, 180. That's not bad.
When you pointed it out to me in our WhatsApp, it was 181 or 82?
198 when I pointed it out to you.
Oh, no, but then I checked right away and it was 181 and 182.
Wow. That's 182. Wow.
And I went to buy it and it immediately shot up to 187. And so I ended up buying it around 170, 187, 188. There's a lot of support at 180. I don't know if we're going to get much lower, but honestly, like I keep saying, 150 is like, if you get there, guys, like just pay attention. Johnny just bought 50 more shares.
Of course. Where's Enphase right now? Is the Enphase falling because of this? Are they related at all?
You know, once again, Enphase makes no money. They make 7 batteries, so that's a total spec stock. Hold on a sec. It's back to 190. Oh, 188 right here. All right, let me see.
I mean, look, I don't think we get to the 175s. Like, again, as you said, we could, but I don't know if it's going to happen. I mean, this thing, as I've seen that price action, again, from a novice Enphase investor, from a technical, this runs up and down quick, right? As soon as it went to 220, it went right down to 188 a couple times. I loaded up a little bit there, then it went right back up to 220. Like, it runs. I don't know. Now, what we need to find out in this earnings call, is there anything legitimately that would justify a sustained downtrend outside of the technicals, right?
Yeah, well, we should listen what's going on exactly, and they might get forward guidance saying we see some slowdown, the rates are affecting us, or whatever is happening.
The other thing, Vitaly, someone mentioned is, let's say the Fed does another 25 basis points. That's another bullish sentiment because the market is like, all right, this is officially the final rate hike, right? So that could be another reason the market rallies instead of goes down, outside of them pausing, because they're not going higher than 5.25, right? Like, that's just not happening, especially as inflation's coming down. So I don't know if we get to 170, 160 as easily as people think, unless the company in this earnings call says something that's troubling enough for people to think.
Yeah, well, as soon as they say, look, if they say their growth is slowing down and we see that the next couple of quarters that we are whatever, like Gabe's bear case, we're down to 30, 40% growth, and you're going from 70 to 30. That is a shock to the system.
Right.
The stock can tumble, but I don't know. I just keep going back to it. Are you in this for like the $200 to $300 run and then you're out?
Yeah.
Like, is that what you're in it? You're in it from 20 billion to 35 or 40 billion and then you're gone. Yeah. Then I think you don't understand what's going on just in the world. And that's a Gabe thing. That seems like a Gabe strategy. He's like, okay, that I don't believe in this, that this is happening. That 3% penetration that's it. That's the end. It's going to go to 4% and be done.
Yeah. Like, no, look, that's why I didn't sell at 220 either. I mean, like, at the end of the day, I'm starting to believe more in the thesis, and like, it didn't seem, as much as it could have been bad, it could have also gone up to 250, right? Things just happen.
Yeah, he's agreeing with my dog was barking. It said, buy Enphase. Okay, well, I only bought 60 shares right now. I bought a little bit more than Johnny. There you go, Johnny.
You bought 60 shares, so you spent how much? 60 times 180 is
11 grand.
11 grand. Okay.
11 grand, somewhere there. But I because I was moving so fast, I'm like, I don't want to make a dumb decision without hearing what Badri has to say too. Do you know what I mean?
Yeah.
So because I do expect to buy more in the 150s, and like I keep going, I have a dividend portfolio. Well, let me check the call.
Yeah, pull up the call. Let's start listening to it. How many people are here? Thank you all for being here and joining us. I think we have 119 people. Wow. Thank you all for being here.
Oh, wow. Enphase community is growing. You understand, when I used to do these live streams, it was like 3 people.
Yeah, no.
So Amit also grew the channel, of course, for us, but it used to be like 3, 4 people.
Yeah. I also think some of the finance junkie people are here. And so that's, I think super awesome.
They're starting. Hold on.
All right, let's listen up.
Participants will be in a listen-only mode.
Do you hear this?
Should you need assistance, please signal a conference specialist by pressing the star key followed by 0.
Yeah, I hear it. We're good.
After today's presentation, there will be an opportunity to ask questions. To ask your question, you may press star and then 1 on your touch-tone phones. To withdraw your questions, you may press star and 2. Please also note that today's event is being recorded. At this time, I'd like to turn the floor over to Karen Saget. Ma'am, please go ahead.
Good afternoon, and thank you for joining us on today's conference call to discuss Enphase Energy's first quarter 2023 results. On today's call are Badri Kothandaraman, our President and Chief Executive Officer, Mandy Yang, our Chief Financial Officer, and Raghu Balur, our Chief Products Officer. After the market closed today, Enphase issued a press release announcing the results for its first quarter ended March 31st, 2023. During this conference call, Enphase management will make forward-looking statements, including but not limited to statements related to our expected future financial performance, the capabilities of our technology and products, and the benefits to homeowners and installers, our operations, including manufacturing, customer service, and supply and demand, anticipated growth in existing and new markets, the timing of new product introductions, and regulatory matters. These forward-looking statements involve significant risks and uncertainties, and our actual results and the timing of events could differ materially from these expectations. For a more complete discussion of the risks and uncertainties, please see our most recent Form 10-K and 10-Qs filed with the SEC. We caution you not to place any undue reliance on forward-looking statements and undertake no duty or obligation to update any forward-looking statements as a result of new information, future events, or changes in expectations. Also, please note that financial measures used on this call are expressed on a non-GAAP basis unless otherwise noted and have been adjusted to exclude certain charges. We have provided a reconciliation of these non-GAAP financial measures to GAAP financial measures in our earnings release furnished with the SEC on Form 8-K, and which can also be found in the Investor Relations section of our website. Now I'd like to introduce Badri Kothandaraman, President and Chief Executive Officer of Enphase Energy. Badri.
Good afternoon, and thank you for joining us today to discuss our Q1 2023 financial results. We had a decent quarter. We reported revenue of $726 million, shipped approximately 4.8 million microinverters and 102 megawatt hours of batteries, and generated free cash flow of $223.8 million. Approximately 65% of our Q1 microinverter shipments were IQ8. We exited Q1 at 46% gross margin, 14% operating expense, and 32% operating income, all as a percentage of revenue on a non-GAAP basis. Mandy will go into our financials later in the call. Let's now discuss how we are servicing customers. Our Net Promoter Score worldwide was 75% in Q1 compared to 71 in Q4. Our North American NPS was 77% compared to 74 in Q4. Our average call wait time was 1.2 minutes compared to 1.6 minutes in Q4. We are focusing on root cause fixes of customer issues and improving our business processes rapidly to enhance customer experience. Let's talk about microinverter manufacturing. Our overall supply environment is quite stable. There are no major shortages right now. We began manufacturing at Flex, Romania in the first quarter, bringing our quarterly capacity to approximately 6 million microinverters. Our European business is growing rapidly, and many customers have asked us for local manufacturing, and we will be able to do that going forward. Let's come to U.S. manufacturing. As we discussed last quarter, the IRA Inflation Reduction Act will help bring back high-tech manufacturing to the U.S. and stimulate economy through creation of new jobs. We are opening manufacturing lines with 3 different manufacturing partners, adding a capacity of 4.5 million microinverters per quarter, bringing our overall global capacity to 10 million microinverters per quarter as we exit 2023. We expect to begin U.S. manufacturing with 1 partner in Q2 and with the remaining 2 in Q3. Let's now cover the regions. Our U.S. and international revenue mix for Q1 was 65% and 35% respectively. In the U.S., our revenue decreased 9% sequentially due to seasonality and macroeconomic conditions, and increased 28% year-on-year. The sell-through of our microinverters in Q1 decreased 21% sequentially compared to Q4, worse than the typical seasonality of 15%. Our microinverter channel inventory at the end of Q1 was relatively normal, while the storage channel inventory was a little elevated. I'll go into details later in the call. In Europe, our revenue increased 25% sequentially and more than tripled year-on-year. Our Europe non-GAAP gross margin is quite healthy, over 45%. Another point to note is that the sell-through of our microinverters in Europe reached an all-time high in Q1. We are now shipping IQ microinverters into France, Netherlands, Spain, and Portugal. In addition to Germany and Belgium, we just recently started shipping IQ batteries to Netherlands, France, Austria, and Switzerland. Let me provide some brief comments on Latin America, Australia, and Brazil. In Latin America, our revenue decreased 2% quarter on quarter and increased more than 70% year on year. Our revenue in Australia increased 6% quarter on quarter, while our revenue in Brazil more than doubled. We are growing very rapidly in Brazil, and given the big market size, we are expanding the team and prioritizing new products. Let me provide some additional color on the US, followed by Europe. We usually recognize revenue when we ship product to distributors and large installers. Most of our installers buy our products from distributors. It is therefore relevant for us to talk about the sell-through of our products from distributors to installers. Since we have a healthy market share in the US, our statistics are a meaningful representation of the business trends. As I said earlier on this call, our sell-through of microinverters in the US was 21% lesser in Q1 compared to Q4. Our sell-through in California was only 9% lesser than Q4. There was some impact due to the weather in early Q1, but the NEM 2.2 rush in Q1 more than compensated for it. California installers took advantage of the NEM 2.2 rush and have built up a solar backlog for the next 3 to 4 months. We believe installers aren't expanding their crews to accelerate installation. They are laser focused on their cash flow due to the high interest rate environment and are looking clarity on the NEM 3.2 demand. Sell-through of our batteries in California was 23% lesser in Q1 compared to Q4 as installers focused mainly on solar. We expect this trend to continue for the next 3 to 4 months. After that, we see NEM 3.0 as a net positive for California and expect strong demand to resume for solar plus storage. Let's cover the rest of the US. The sell-through of microinverters in non-California states was 25% lesser in Q1 compared to Q4. We observed that the sell-through was even lower in states with low utility rates such as Texas, Florida, and Arizona. In these states, the economics of loan financing has worsened due to rising interest rates. The sell-through performance in the Northeast US was a little better. Coming to IQ batteries, the sell-through in non-California states was 28% lesser in Q1 compared to Q4. Let's briefly discuss the health of our US customer base and some trends in financing. Our Q1 data shows higher sell-through rates for long.
Hold on.
Are navigating 3 key challenges. First, the rapid increase in interest rates over last year. Second is switch from selling low APR with high dealer fees to selling market rate loans with low dealer fees. And third, the delayed payment from the loan originators, or as the industry calls it, reduction of M1 payments. Let's discuss about the second and third challenges. We see the move to high APR and low dealer fee loans as a positive for the industry. The demand for market rate loans remains strong. New capital providers who were not able to buy below market rate loans are now offering solar financing. Installers are adjusting their sales practices for a higher interest rate environment. We are also seeing new lease providers entering the market with focus on servicing the long tail. We think capital will be available for both long tail installers, regardless of the mix of loan and lease. On the reduced M1 payments, loan originators are providing less cash to installers at the time of contract signing and a greater percentage after installation. This creates a working capital challenge for the installers and is forcing them to become more efficient. As the installers adjust to this new reality, we expect the sell-through of microinverters and batteries to incrementally improve in Q2 compared to Q1. Q2 is seasonally stronger and should help the situation even more. Let's come to Europe. Our European business is doing very well. We expect healthy revenue growth in Q2 compared to Q1. Our business is growing much faster than the market. We plan to introduce IQ8 microinverters and IQ batteries into many more countries in Europe throughout the year. Our value proposition is our differentiated home energy management systems combined with high quality and great customer experience. We are integrating the products from our latest acquisition, Greencom Networks, into our Enphase home energy system starting in Germany this quarter. This will help network third-party EV chargers and heat pumps with Enphase solar plus storage systems. The benefit to homeowners is a reduced electricity bills due to increased self-consumption, in addition to having control via the Enphase app. Let's talk about new products. I say internally in the company that 2023 is the year of new products and is coming in good time. We are getting ready to launch our third generation IQ battery in North America and Australia this quarter. In Australia, we will also launch the IQ8 microinverters. As I previously discussed, the IQ battery has a modularity of 5 kilowatt hours and delivers double the continuous and triple the peak power compared to our prior generation of batteries. The higher charging and discharging rate of our third generation battery will be uniquely beneficial for NEM 3.0 systems in California through its ability to generate revenue by exporting into the grid at the appropriate time. In addition, our third generation battery is very easy to install and commission. We are currently piloting these third generation batteries in Australia and the US with select installers and are very excited about the experience we are about to deliver to our customers. Next, let's talk about our latest new product for the residential segment in emerging markets. This product, the IQ8P microinverter, will deliver 480 watts of AC power, supporting panels up to 650 watts DC for Brazil, Mexico, Spain, India, and emerging markets. We are on track to release IQ8P into production in the second half of the year. The other variant of IQ8P microinverter with the new three-phase cabling system is well suited for small commercial solar installations ranging from 20 to 200 kilowatts, such as gas stations, schools, hospitals, churches, and small businesses. These microinverter systems offer the same grid compatibility, high quality, and rapid shutdown capability as our standard residential products. We expect to release this product into the US small commercial solar market in the second half of 2023. Let's discuss EV chargers. We shipped over 8,600 chargers in Q1 compared to 7,600 chargers in Q4. We are now shipping Enphase branded EV chargers from Flex Mexico, helping us increase capacity and reduce costs. We are on track to introduce IQ Smart EV chargers in Q2. These chargers will have Wi-Fi connectivity, enabling use cases like green charging and allowing homeowners visibility into operation of their Enphase solar plus storage plus EV charger system through their app. Let's now discuss the installer platform. We released several updates to our Solar Graph design and proposal software, including basic NEM 3.0 functionality, battery design, document management, and other improvements as requested by installers. We have more than 1,000 installers using the software. NEM 3.0 incentivizes homeowners to use solar and battery systems for avoiding energy imports while compensating homeowners for exporting energy when the grid needs it. The updated Solar Graph platform offers a simplified experience for designing a NEM 3.0 system by optimizing panel placements, configuring battery sizing, leveraging its modularity, and enhancing system operations for self-consumption and energy export to deliver the best possible payback. We see that solar plus storage under NEM 3.0 can achieve a payback period between 6 and 8 years, depending on the utility. As we said before, the higher power of our third generation battery helps us to export more energy to the grid and maximize savings. Let me conclude. With the residential solar and storage markets growing rapidly in Europe, we are in a great position to significantly accelerate our business. The situation in the US is a little different with NEM 3.0 in California and the macroeconomic challenges in the rest of the US. Our strategy doesn't change. We are focused on working closely with our installers to address their issues, making new products, and entering new markets and countries. The fundamentals are intact for our industry. The 30% ITC for the next decade, the rising utility rates, the focus on climate change, and the desire for resilience are all going to push the need for solar plus storage more than ever before. With our differentiated products, high quality, and exceptional customer experience, we are in a strong position to capitalize on this trend. With that, I will turn the call over to Mandy for her review of our finances. Mandy.
Thanks, Badri, and good afternoon, everyone. I will provide more details related to our first quarter of 2023 financial results, as well as our business outlook for the second quarter of 2023. We have provided reconciliations of these non-GAAP to GAAP financial measures in our earnings release posted today, which can also be found in the IR section of our website. Total revenue for Q1 was $726 million, slightly up from the fourth quarter of 2022. We shipped approximately 1,957 megawatts DC of microinverters and 102 megawatt hours of IQ batteries in the quarter. Non-GAAP gross margin for Q1 was 45.7%, compared to 43.8% in Q4. The increase was driven by increased IQ8 product mix and improved logistics. GAAP gross margin was 45% for Q1. Non-GAAP operating expenses were $98.4 million for Q1, compared to $87.7 million for Q4. The increase was driven by international growth and R&D. GAAP operating expenses were $158.7 million for Q1, compared to $153.7 million for Q4. GAAP operating expenses for Q1 included $56 million of stock-based compensation expenses and $3.7 million of acquisition-related expenses and amortization for acquired intangible assets, and $700,000 of restructuring and asset impairment charges. On a non-GAAP basis, income from operations for Q1 was $233.6 million, compared to $229.4 million for Q4. On a GAAP basis, income from operations was $167.7 million for Q1, compared to $157 million for Q4. On a non-GAAP basis, Net income for Q1 was $192.3 million, compared to $212.4 million for Q4. This resulted in non-GAAP diluted earnings per share of $1.37 for Q1, compared to $1.51 for Q4. GAAP net income for Q1 was $146.9 million, compared to GAAP net income of $153.8 million for Q4. This resulted in GAAP diluted earnings per share of $1.02 for Q1, compared to $1.06 for Q4. The decline for both non-GAAP and GAAP net income and earnings per share was driven by our higher effective tax rate, as we are now a significant U.S. cash taxpayer. We exited Q1 with a total cash equivalents, and marketable securities balance of $1.78 billion, compared to $1.61 billion at the end of Q4. We did not make any open market share repurchases against our $200 million share repurchase authorization. Instead, we spent approximately $72 million to cover withholding taxes for the employee stock vesting in Q1. That reduced the dilutive shares by 338,000 shares. We expect to continue this anti-dilution program throughout the year. In Q1, we generated $246.2 million in cash flow from operations and $223.8 million in free cash flow. Capital expenditure was $22.5 million for Q1, compared to $16.4 million for Q4. The increase was primarily due to investment in R&D equipment and U.S. manufacturing. Now let's discuss our outlook for the second quarter of 2023. We expect our revenue for the second quarter of 2023 to be within a range of $700 to $750 million, which includes shipments of 80 to 100 megawatt hours of IQ batteries. We expect GAAP gross margin to be within a range of 41 to 44%, and non-GAAP gross margin to be within a range of 42 to 45%, which excludes stock-based compensation expenses and acquisition-related amortization. Our guidance numbers do not include any IRA benefits. We expect our GAAP operating expenses to be within a range of $155 to $159 million, including approximately $57 million estimated for stock-based compensation expenses, acquisition-related expenses and amortization, and restructuring charges for site consolidation. We expect our non-GAAP operating expenses to be within a range of $98 to $102 million. We intend to keep the non-GAAP operating expenses flat in Q2. We will continue investing in product innovation and international growth while making other areas of the company more efficient. Moving to tax, since we have utilized most of our net operating loss and research tax credit carry forward, we are now a significant U.S. cash taxpayer. We expect GAAP and non-GAAP annualized effective tax rate for 2023 to be at 22%, plus or minus 1%, before any IRA impact. Now I'd like to discuss how the advanced manufacturing production credit from the IRA would be reported in our earnings while waiting on the implementation guideline from the U.S. Treasury. Based on the current guidelines, the production credit can be claimed as direct pay or in the form of tax credits. Under direct pay, the production credit will be accounted for as a reduction in cost of goods sold. And if tax credits, it will be reported in the tax expense line. Either method will provide us the same dollar impact to our earnings per share, as the production credit is non-taxable. We expect the production credit, net of any incremental costs for domestic manufacturing, to be in the range of $20 to $30 per microinverter sold to customers. We expect to ship 50,000 made in USA microinverters to customers this quarter. We plan to have our U.S. contract manufacturing facilities to be fully operational by the end of 2023. We estimate shipments to reach our U.S. capacity of 4.5 million microinverters per quarter by the end of 2024, assuming robust demand. With that, I will open the line for questions.
Ladies and gentlemen, at this time, we'll begin the question and answer session. To ask a question, you may press star and then 1 on your touchtone phones. If you are using a speakerphone, we do ask that you please pick up the handset before pressing the keys to ensure the best sound quality. To withdraw your questions, you may press star and 2. In the interest of time, we do ask that you please limit yourselves to a single question and 1 follow-up. You may re-enter the question queue if you do have additional questions. At this time, we will pause momentarily to assemble the roster.
So were you listening?
Our first question today comes from Colin Rusch from Oppenheimer. Please go ahead with your question.
Thanks so much, guys. Can you talk a little bit about channel levels outside the U.S. and how much of the 2Q guidance is really about just selling into the channel to get the channel full to serve the markets in both Latin America and Europe?
Yeah, actually in Europe, our channel is rather light. We've been tight on product in the last few quarters. And so the channel is light. By light, I mean, we consider channel to be normal between 8 and 10 weeks of inventory. And light means less than 8 weeks. So basically, that's the situation there.
Okay. And then with the battery volumes, declining sequentially and continuing into 2Q, can you talk a little bit about how much of that's related to the product cycle you guys are going through, and how much of that is just related to overall underlying demand?
Yeah. On batteries, as an executive team, we are hyper focused on batteries as much as on our microinverters. Our learning curve on batteries has been tremendous. As we speak, our second generation batteries are getting better and better every day in both their installation and performance. Our third generation battery, like what I said, is coming soon into the US and Australia in Q2. That'll be even better with wired communication CAN and with double the continuous power and triple the peak power, and with enhanced modularity as well as serviceability that helps us in dropping costs, compared to the prior generation. And of course, it's LFP, so it's the safest battery. The demand in the US, that demand being down is temporary. I described the dynamics due to the NEM 2.0 pull-in in California, as well as the increased interest rates outside of California. We believe that's a temporary problem. Installers will figure out what to do outside. And, California, we're incredibly bullish on NEM 3.0. We think our battery is going to be perfect for NEM 3.0 because the increased power of the battery will give the ability to export more energy during the time when the grid needs it in August and September, and people can get paid handsomely for it. And because of that, you see the payback for a solar plus storage system under NEM 3.0 is approximately 6 to 8 years, depending on which utility you are in. So we think, NEM 3.0 will accelerate the attach rate of batteries, and it might take a little bit of time for the industry and for the consumers to realize it, but I have no hesitation that NEM 3.0 will be better for California. Now, let me come outside the US. So far, we've been shipping to Germany and Belgium in Europe. This quarter, I would say in end of March as well as in the beginning of April, we introduced batteries to four more countries. Basically, France, Netherlands, and Switzerland. Actually, Austria, to correct myself, that was a month or two ago. So we just introduced batteries in 4 countries. We are going to introduce our third generation battery in Australia in Q2, in addition to the US. In both Q3 and Q4, we are going to target several more countries in Europe. We'll be in Italy and UK by Q4. So on the batteries, we're just getting started in Europe, and I think the volumes will start ramping there. And in the US, it's a matter of time. The rest of the US recovers, the installers start selling batteries again, and in California, it'll be a no-brainer with NEM 3.0. So the numbers are only going to get better from here on. The long answer, I just wanted to give you a full picture.
All right. Thanks so much, Badri. I'll hop back into queue. Thanks, guys.
Our next question comes from Maheep Mandloi from Credit Suisse. Please go ahead with your question.
Hey, good evening. Thanks for taking my questions here. Maybe just on the battery question, just to elaborate on that, do you see any opportunity for lower peak kilowatt battery, which is mostly used to as a rate arbitrage device versus a full home backup solution? Just any thoughts on that kind of a device, which where you could use your Gen 2 solutions as well?
Yeah, I think both Gen 2 and Gen 3, if you look at Gen 3, as Badri mentioned, this is Raghu, by the way, the power is double the max continuous power of the Gen 2 and 3 times the peak power. The peak power, as a reminder, is what gets used to manage heavy loads during startup times. But to answer your question, the power can be modified. We can set the limits to what the power needs to be in software. So what that does is just makes the whole process very efficient for the installer. They have got one SKU to purchase. They can install that one SKU, which would be the 5 kilowatt hour SKU, and then they can vary the power depending on what the homeowner's needs are, whether that is going to be a NEM 3 system, which could be just one battery with a PV system, and it happens to be grid tied, for example, or 10 kilowatt hours of battery that could be providing partial home backup, or you could be doing 20 kilowatt hours and doing whole home backup. So all of that, the beauty of the system is that it's all can be configured in software and gives you a tremendous amount of flexibility and simplicity for the installer.
Got it. And just a second question from me on ASPs. If you could just talk about how to think about ASP trends here. You talked about inventory being slightly light in Europe, but as we kind of come out through the rest of this year and some of these component shortages and logistic issues slowed down, do you expect any reduction in ASPs in Europe or the US markets? Thanks.
We don't see any drop in pricing. In fact, you see our gross margins sequentially up a couple of % from Q4 to Q1. And also I broke out the gross margins in Europe because some of you had been asking me. The gross margins in Europe are incredibly healthy. They're over 45%. The gross margin in the US is incredibly healthy. Pricing is stable. For us, gross margin means both price as well as cost. And so we do value-based pricing, which is basically price products based upon the value they bring compared to the next best alternative. Like, in batteries, it may be increased power, increased safety. In microinverters, it may be increased quality, increased service. So that's on the pricing side. On the cost side, we have a task force that runs all the time called world-class costs. So we are constantly discovering ways to save, a cent in the microinverter. For example, based on last year's shipments, last year we shipped 15 million microinverters, in 2022. So 1 cent reduction for us means $154,000. So it's very important for us. Even 1 cent reduction, even half a cent reduction is important for us. So we take it extremely seriously. On batteries, with a third generation battery, which has got higher modularity, has increased serviceability, Now I think we can reduce the overhead contribution and costs to a minimum. And on batteries, the gross margin of every generation will get better than the prior generation. So long answer again, but ASPs, we do not see much change, and our cost programs are going well.
Got it. No, appreciate it, and thanks for taking my questions here. Thanks.
Our next question comes from Corinne Blanca from Deutsche Bank. Please go ahead with your question.
Hey, thank you for taking my question. Could you comment a little bit on competition in Europe versus China-based company and maybe like the risk of margin erosion in that market?
Yeah, this is Raghu again. Competition is strong everywhere. It's always been. It's nothing new, both here in the U.S. as well as in Europe. And so for us, we are always striving to make sure that we are providing providing value and providing a highly differentiated solution. So if you look at the solutions that we provide, both here as well as the US, from a product point of view, I'll talk about other stuff as well. From a product point of view, we are truly a distributed architecture that gives us much better performance, much better reliability, and because it's a low voltage DC system, both solar and batteries, etc., it's arguably much safer as well. In addition to being very simple to install, maintain, and manage. The second thing we also look at very closely is that providing very high quality, high reliability products. And that's, again, a big differentiator. And it starts with the architecture as well as all of the work that we do in delivering a very high quality product. And finally, it's customer service, just making sure that, as Badri mentioned, if you look at what our NPS is, look at what our call wait times are. If somebody calls us, we answer the phone immediately. It's one phone call to make because typically they're buying the entire Enphase system. And so delivering the best customer experience, both for our installer for our distributor partners, installer partners, as well as for the homeowner. For the homeowner, they have just one app to look at, and they have the control of their entire system in the palm of their hand. So to summarize, it's highly differentiated products, high reliability products, and great customer experience, and that's how we manage. That's how we deal with the competition, and reflected in pricing and gross margin, as Badri mentioned.
Great, thank you. And a follow up a little bit different topic, but coming back to California, you mentioned there's about a 3 to 4 month backlog from the purge that was done in 1Q. I know you do not provide further than next quarter guidance, but do you expect sequential improvement throughout the year? I mean, in the second half of the year, better than the first half, or just trying to get a view there?
It's hard for me to say right now, but I know that NEM 3.0 has got great fundamentals in California. And contrary to what I've read from the reports, it is a change. Selling from NEM 2.0 to NEM 3.0 requires the installers to adapt. And now the storage attach is going to be a lot more. It is a change in selling. It is a change they are not used to yet. So the next 3 to 4 months will be probably well spent in training the installers on how to sell NEM 3.0, because with NEM 3.0 now, the consumption of the homeowner is important. NEM 3.0 has got tariffs for 24 hours during the day times 365 days a year, so 8,000 plus points, 8,000 plus data points. So it's very important. Your consumption profile is important. So your savings obviously depends on the consumption profile. So we need to make a few things clear to the homeowner, and we need to clearly tell him that basically him or her, that self-consumption, you're going to do self-consumption most of the time, which means what? Your consumption is going to be met by either solar and or storage. But during the months of August and September, we have all seen blackouts in California. During the months of August and September, why? Because the demand on the grid is higher than supply. In August and September, under NEM 3.0, you get paid for actually helping the grid. You get paid handsomely. And at that time, battery is going to be your best friend. You're going to be making a lot of money on batteries. So I think, my personal opinion is NEM 3.0, of course, it requires a lot of evangelizing, a lot of selling, but NEM 3.0 will be a catalyst for solar plus storage. Like Germany. If you go look at Germany, Germany, the solar market is over 2 gigawatts, maybe 3 gigawatts right now. The attach rate is over 80%. It's a pure self-consumption market. And the tariff structure is similar. I think the import rate is 41 euro cents per kilowatt hour, and the export is something like 11 euro cents per kilowatt hour. So very similar construct. I think the result will be the same. Of course, it's not going to be overnight. It's going to take time, but great for the long term.
Thank you.
And our next question comes from Brian Lee from Goldman Sachs. Please go ahead with your question.
Hey, Badri and team. Thanks for taking the questions. Maybe just to follow up on that one, just if we drill down on storage specifically, that hasn't really grown here for a number of quarters, and you're guiding sequentially down there on shipments. I know NEM 3.0, it sounds like it's going to take a little bit of time to filter through the market, but do you anticipate that your storage volumes will grow sequentially at any point moving through the rest of this year? That'd be my first question, and then I have a follow-up.
Yeah, I think the storage volumes are going to go, Q2 is probably the low. They're going to grow from here on. And simply because of one reason, we are going to be introducing batteries to a lot more countries. We just introduced to 4 countries. And, we're going to be introducing the 3rd generation battery in Q2 this quarter. Then we are going to be introducing the 3rd generation battery into multiple countries in Europe. So NEM 3.2 is a part of the equation, but not the only thing in the equation. And eventually the installers are going to figure out how to sell batteries in the rest of the US, despite the high interest rates. So like what I said, I think we are turning the corner on batteries. We have understood how to enhance the customer experience. Even our 2nd generation batteries are best in class right now. The 3rd generation batteries will obviously make things even better with double the power. Double continuous, triple peak. Yep.
Okay, understood. So Q2 is the low point. That's helpful. And then just my follow-up would be, I appreciate the additional commentary about sell-in versus sell-through and providing that context. But I was a little bit confused as to, what it means for channel inventory situation and kind of what you're expecting, because it almost sounds like, with sell-through being down much more than sell-in, that maybe inventory levels in the U.S. are elevated. I know you said it was on battery storage, but not micros. But when do you expect maybe sell-in and sell-through to kind of match up more aligned? And then I guess what is sort of the viewpoint on whether there's some inventory drawdown that's impacting near-term sort of volume opportunity? Thanks, guys.
If you see mathematics, right? If you see 1 week of channel inventory equals roughly 7.5%, right, of the quarter, right? If you split the quarter into 13 weeks, so 1 week is basically 7.5%. So if something, let's say if in 1 quarter, if the sell-through is, let's say 15% down, that equates to 2 weeks of inventory. And so it is nothing over the top. It is if your normal channel inventory is somewhere around 10 weeks or 8 to 10 weeks, this would result in a slight, instead of 8 weeks, you would be at 10 weeks. That's what you're talking about. So now, having said that, we expect sequentially better sell-through. Q1 is usually bad for sell-through due to a combination of weather, plus now there is a macroeconomic effect on top of it. So Q2 is seasonally better, plus with the installers getting a little bit more adjusted to the situation, things are going to be incrementally better in terms of sell-through in Q2 onwards.
Okay, appreciate that. Thank you.
And our next question comes from Philip Shen from Roth MKM. Please go ahead with your question.
Hey guys, thanks for taking my questions. The first one's on pricing as a follow-up to a prior question. Our checks suggest pricing through the U.S. Resi ecosystem is coming down rapidly. So U.S. Resi solar module pricing is down 15 to 30+%. Powerwall pricing is down meaningfully. Some of your inverter peers have lowered inverter pricing. We've heard that you guys may have lowered pricing as well for specific larger customers on a one-off basis. I think, Badri, you just mentioned that you don't see any drop in pricing, but can you give us some more color on how you expect to maintain price, especially in this more difficult environment? And can you talk about price specifically in Q3 and 4? If you expect it to hold, how does it hold? And if there is some risk, maybe talk about that risk. Thanks.
You can see our numbers. Our gross margin is 2 percentage points better in Q1 than Q4. It basically comes because of our disciplined, pricing management, plus the conversion for us to IQ8. IQ8 comes with an outstanding cost structure. And, right now we are at 65% converted to IQ8. We expect to be at nearly 90% converted to IQ8 by Q3. So, and we have an active cost reduction, effort going on. So even if we do, one-off deals, for example, in order to, accelerate our market share, these are not going to cause a dent, for us. So we expect pricing to be generally stable. The same thing is true on batteries. On batteries, we are learning rapidly. We are learning a lot on costs, especially the overhead costs on the battery returns. The serviceability of batteries are tough, if you ask anybody in the industry. And I think we are getting better and better and better at those, basically improving the battery quality by root cause corrective action, by understanding the defects, by eliminating the defects, by putting in permanent corrective actions in place. Then also, building in serviceability into our new products. So why take down a, $3,000 product from the wall? Why not take down a $40 board from the wall instead? Why not repair it in situ? Why not service, right there in 30 minutes? So there's a lot of money to be taken out of batteries from a cost perspective. That's what we are doing.
Great. Really appreciate that color. As a follow-up there, Badri, to what degree do you think you may be giving up on some volume? I think Tesla is a string inverter. They're ramping up, and I think they're selling inverters only. And yes, I know your technology is meaningfully better, does many things that they can't do. But in this tough economic environment, installers may be prioritizing, costs. So, with a, high gross margin where you are now, you may be able to, maintain some share without giving much on price, but still, keeping, some of that volume. So how do you make that trade-off between price and volume as we get through the next few quarters?
Yeah, I don't. For me, it is high quality leads to high price. And why? Because it's the entire cost of ownership. Installers have become smarter. Basically, they understand it is not about just the price of the inverter. The time, the money it costs them to go and address a failure is so huge compared to a few dollars more on the inverter for high quality. So high quality is what we focus on. And installers have realized that. And they are continuing to work with us. And you can see the latest Energy Sage reports for the data. And the data is there. So we don't plan on changing our strategy there.
Great. Thank you so much for the color.
Our next question comes from Andrew Paracco from Morgan Stanley. Please go ahead with your question.
Great. Thanks so much for the time. I just wanted to follow up, Badri, with some of your prepared remarks around the health of the customer base, specifically the long tail. Can you just maybe talk about what you're seeing from some of those customers, and talk a little bit about working capital needs? But just when it comes to the financing environment, the confidence level and their ability to get financing. And then maybe on the other side of that, to the extent the core, long tail doesn't perform as expected, what's the optionality to sell to some of the larger players in the market? And what might that mean for pricing and margins?
Yeah, just to recap what I said, and it's good for everyone to hear it again, is our overall sell-through of microinverters in the U.S. was 21% lesser in Q1 compared to Q4. California was only 9% out of that because we understand the situation with NEM 2.0. So the NEM 2.0 rush basically compensated for any weakness, weakness due to the macro. In the rest of the U.S., the sell-through dropped by 25% compared to Q4. And the most notable drops were seen in the states with the lowest utility rates. Texas, Florida, Arizona. Then we did an analysis on, how did the long tail installers do in comparison with the tier 1 and 2 installers. We found in our analysis the sell-through rate of long tail installers was quite better compared to the tier 1 and 2 installers. Now I'm not exactly sure of the reasons. I can only speculate. Maybe they're local there, they do a better job of servicing the client. Maybe they deal with high valued clients, but we thought from the questions we had that the long tail was going to be a little more stressed, but we found the opposite in our data. But having said that, I mean, all installers are affected by three things, like what we said. The interest rates are high. That's the first thing. So basically, it's getting, more difficult to, solar with loans is getting a little more difficult to sell. Basically, earlier they used to do low APR loans with high dealer fees, and that was common, whether it's long tail or tier one and two installers. Now they are switching to higher APR with lesser dealer fees, sometimes no dealer fees. The cash flow issue, that is the milestone one payment, is a lot reduced now. That's causing stress. Some of the, our expectation was some of the tier 1, 2 installers may be able to handle that situation better than long tail, but we didn't, the data didn't indicate that. For us, the data said that the long tail is okay, is holding up. And we think it is a matter of time. We think the industry as a whole is going to adjust. Of course, there are a few installers who may actually, find it difficult. But in general, the industry is going to adjust to the new loan structures. Probably it's a big opportunity for more people to come in to the market to offer loans and leases to long tail installers. Leases to long tail installers hasn't been rampant till now, but that's an opportunity that we see already a few players come in. So I think it's going to be interesting to watch the situation in the next few quarters. But I think this is a resilient industry, and I believe things are only going to get better from here. Q1, as I indicated, is usually the worst quarter of the year due to seasonality. And so that, Q2 is usually a good quarter in terms of seasonality. And with the adjustments installers are making in running their business, we expect things to be incrementally better.
Got it. That's helpful. And maybe this last one for me on net metering officially took effect, I guess, a week or so ago. Any kind of first indications from the installers in terms of what they're seeing in terms of, to your point, some of the friction points around quoting and installation? Are they, any indications of how much growth might slow in California now that it's officially taken effect? I know it's only a weekend, but any color that you have there would be helpful.
It's only a week, as you said. We have talked to a number of installers. All of them are optimistic that their solar plus storage business can boom. They are all, we shared solar graph with them. We shared the designs. We showed them, three examples per utility. We showed them how a pure solar case looks. We showed them that, solar now in west-facing roofs is not bad. We showed them solar plus storage is actually, better than NEM 2.0 or equivalent. So now actually storage has got meaningful savings right now. Earlier with NEM 2.0, storage didn't have value in terms of savings, but had a lot of value on resilience. Now, storage provides economic advantage in addition to resilience. So installers are getting it. As I said, they do have a little time on their hands in order to start accelerating the originations. But I think, the data is there that supports it. And we do expect, like in Germany, we do expect grid-tied batteries to become popular too. Because imagine you have 8 kilowatt solar system and the crew is already there. They're installing the solar system, and all I need to do is to install one of Enphase's 5 kilowatt hour battery. That battery is not big. It is small. It can be done very quickly on the wall. There is no partial home, whole home, nothing to worry about. There is no work on the main panel. It's a simple 5 kilowatt hour battery, and it provides savings right away. So, selling needs to pick that up. I'm sure they can sell it.
Understood. Thanks so much for the time.
Thank you.
Our next question comes from Jordan Levy from Truist Securities. Please go ahead with your question.
Thanks, all, and thanks for all the commentary. Just a quick one for me to follow up on a question of share. I'm just curious with the EU's Green Deal industrial plan, if you've seen any shift in the competitive environment over there, any pop-ups of mom and pops trying to sell into the market or anything like that.
No, we haven't seen. I think the competitive environment is what has been there, and it's consistent. And and as I mentioned earlier on the call, that given our differentiated solution, our reliability, customer service, etc., we compete very effectively. So I don't think that environment has changed, if I understood your question correctly.
And would you say that's true both on the battery and micro side?
Yeah, it's a solution play, right? That's the most important. Short answer, yes, it's a solution play. When people buy solar there, if you look at countries like Germany as an example, when they say I'm installing a solar system, what they really mean is they're installing solar and batteries and EV chargers and heat pumps. So I think we have to provide the complete solution if you want to be an effective player particularly in Europe.
Great, thanks so much for that.
Our next question comes from Mark Strauss from JP Morgan. Please go ahead with your question.
Yes, good afternoon. Thanks for taking our questions. Getting late in the day here, so I'll just stick to one and take the rest offline. I wanted to come back to the OpEx. The guidance for 2Q is kind of flattish quarter over quarter. Just from a high level, not necessarily looking for specific guidance, but from a high level, I mean, to the extent that the macro continues to deteriorate, California transition might take longer than expected. How should we think about OpEx going forward and kind of balancing near-term profitability with, a lot of the investments that you're making in geographic and product expansion and everything else?
You should always think about OpEx at 15% of sales. That's the general model. All I said in Q2 that we're not going to be compromising on innovation. We're not going to be compromising on international growth. We're going to make generally the company better in other areas. But our baseline is 15% of revenue, and we don't plan on exceeding that.
Okay, fair enough. Thank you.
Our next question comes from Christine Cho from Barclays. Please go ahead with your question.
Thank you for taking my questions. For the U.S. manufacturing, I think you guys just said in your prepared remarks, shipments should be 4.5 million per quarter by the end of 2024, assuming robust demand in the U.S. But in the event that your U.S. demand is less than that, would you still want to utilize that capacity and export the product and back out some of your production elsewhere? How should we think about that?
Yeah, we'll most likely do that. But, we don't do things just for profitability. We do have contract manufacturing plants that are worldwide. We have worked hard to establish a balanced manufacturing strategy. So we just need to be careful in looking through and making sure that we make the best decision for both profitability and balancing manufacturing.
Okay. And then, on the IQ8 rollout, that's been slower than expected. Could you just go into some more detail into what's driving that? Is it on the supply side with any of the components, or is it on the demand side as customers sound like they've had to work through inventory over the last quarter or two. And I think on the last quarter call, you said you expected it to jump to 80% in 2Q. So is that still the expectation? And then just with the gross margins, it's very high this quarter, and the IQ8 drove that. But your 2Q guidance is lower, and batteries are lower, so that's going to be less of a drag. So is this just conservatism, or is there anything one-off that we should be aware about in 1Q or 2Q?
There's nothing one-off. You're right. We are originally, I thought 90% by Q2. Last earnings call, I told you 90% by Q3. That's the number, 90% by Q3. 80% by Q2 will be okay. We are, for example, in Europe, 50% of our volumes are IQ8 right now. We are introducing IQ8 to many more countries as we speak. Yesterday, we introduced IQ8s to Spain and Portugal. Soon, we will introduce to Poland, Germany, etc. We plan on doing the bulk of those introductions in this quarter. Most of them, there will be some spillover in Q3 for a few, but we very much want to achieve 90% in Q3. That's our target.
I missed what he said.
Our next question comes from Kashy Harrison from Piper Sandler. Please go ahead with
He
your
said
question.
90% what? I missed that.
Good afternoon. Just one quick
If anyone knows, just put in the comments.
So, you're currently sitting on, call it $600 million of net cash, generated around $225 million of free cash flow during the quarter. So just wondering, what your thoughts are on using the free cash generated this year to perhaps more aggressively repurchase stock. Thank you.
Yeah, I mean, we have stated our strategy. It is unchanged. Basically, first make sure that we have plenty of cash for the needs of the business, the capital that we need for, our portion of U.S. manufacturing, etc. We're doing exactly that. The next one we look at are there any, M&As that we should be taking advantage of now. We look at a number of companies on a weekly basis in the areas of batteries, even in power conversion, in software, in home energy management, EV charging. We look at many, many areas, and that's the second priority. The third one is if we basically, if we have cash left over from number one and number two, we will buy back stock, assuming the share price, is below a conservatively, estimated intrinsic value. So we will do that. Our board looks at it very carefully, and that's our strategy.
Thank you.
Our next question comes from Eric Stine from Craig-Hallum. Please go ahead with your question.
Hi, everyone. One here at the end for me. So, I know a lot of moving parts. You've got a big revenue range on one hand, less seasonality on the other, channel inventory that you've detailed. I'm just curious if you'd be willing to kind of go through a scenario that gets you to the high end of that revenue range and a scenario that gets you to the low end of that range, and maybe how that breaks down between the U.S. and international.
Yeah, I mean, we are pretty conservative when it comes to our guidance. You should see our track record in general, and we do have, like what I said, we do have a lot of dry powder in terms of new products. This year is the year of new products, and we are going to be releasing new products constantly. And so we think, other than the base business, which we guided on in Q2, there is a lot more to come there. So our guidance is a little bit wider this time, plus minus $25 million. It is to reflect a slightly more uncertainty compared to the last time. But our US, our Europe business is doing incredibly well. We grew 25% in one quarter from Q4 to Q1. We have doubled. We doubled from 2020 to 2021. From 21 to 22, we grew 132%. I just released my annual letter yesterday. You can see that 132% growth from 21 to 22. And so Europe is doing incredibly well for us. We are focused on entering a lot more countries there. We are focused on IQ8 microinverters. We're focused on IQ batteries. Lots of regions, big market, over 10 gigawatts, compared to the US, which is 5 gigawatts right now. So, bottom line, we are pretty conservative.
Got it. And then, you do have the wide range, but it did seem in your commentary that you do expect improvement versus the first quarter. So is it fair to say that, your expectation would be the top half of that range?
We give guidance. We give guidance, 700 to 750, and, there's nothing else for us to say. We cannot say we are in the top half of the range.
Okay. Got it. Thank you.
Our next question comes from Joseph Osha from Guggenheim Partners. Please go ahead with your question.
Hey there. I just wanted to return to some of the mechanics around the ramp of onshore manufacturing. Mandy said, 50,000 units this quarter, and then 2 lines by the end of the year. So my first question is, does that 50,000 mean manufactured or shipped for revenue? And then secondly, looking at the end of the year, just wondering if you can tie those comments back to maybe a unit number or a run rate at the end of 23, not 24. Thank you.
Yeah, 50,000 microinverters shipped to customers. That's what we talk about. We always talk about shipments. And then,
all right.
Therefore, you should take that number. You should take 4.5 million unit number by end of 2024. You can do some kind of an interpolation. You can work with us, and linear interpolation may be fine too.
Okay, all right. Probably even a sell side analyst can handle that math, but so you're not giving me a specific number for end of 23 at the moment, right?
Yes, and like what you said, you can really calculate it.
Okay, all righty. Thank you.
Our next question comes from Julian Dumoulin.
We should just talk now.
Please go ahead with your question.
If you want to keep hearing.
Excellent. Thank you, guys. Good afternoon. I'll make it quick here. Just with respect to the commentary on temporary impacts, I just want to clarify that super quickly. Obviously, you've got this NEM dynamic for the next couple quarters or so as you deal with the origination on NEM 2.0. How do you think about that squaring up against this temporary impact on installations? I know you commented earlier there's a transition period on sales. How much of a non-California improvement are you guys thinking about, especially in the back half of the year as NEM 3 kind of rolls in more meaningfully?
We cannot predict what it's going to be in the back of. All I know is Q1 is supposed to be seasonally, a tough quarter. And on top of it, in Q1, installers had to face all of these uncertainties for the first time. Q1 as well as probably Q4 a little bit. So I think we said, and we hope this is true, is installers are going to adjust. Everybody's going to adjust. And, of course, as long as interest rates are so high, we cannot, we're not saying that the numbers are going to return back to where it were. There is going to be stress on those numbers because interest rates are high. But there are going to be some innovation in financing, innovation in loans, innovation in leases that are going to come. It's going to provide more access to our long tail installers. The demand will unleash only when the interest rates are back to normal. But until then, it'll get incrementally better, compared to Q1.
And there are things that we control, we can control, right? For example, helping our installer partners, training them on how to sell NEM3 systems. So this is where Solargraph plays a very key role in helping them to show exactly how easy it would be to build an M3 system with our R3 battery and show the payback period and bill offsets, et cetera, and how to sell that to the homeowners. And that we are doing right now as we speak. So I think there are things that we control, and then there are the macroeconomic trends, and there'll be people who will be, as Buddy mentioned, innovating on the finance side.
But when you said temporary here and demand being down, just to clarify that super quickly, I know you only guide one quarter forward. I'm just trying to understand how temporary.
What we said is in California, the point of sales, which is sell-through data, didn't show as much decline because in California, the installers have their hands full with NEM 2.0 installations for the next 3 to 4 months. And now, in this time, which is when the originations are happening for NEM 3.0, this is the time where we are working with those installers and helping them understand and pitch the value of NEM 3 to homeowners. That's in California. Outside California, the situation is purely dominated by high interest rate environment. So there, we are talking about installers, first of all, getting used to working with reduced cash flow, number one, innovation on.
Okay, you hear me?
Yeah.
I mean, I do want to hear the rest of it, but we'll do that in our own time to have a more thorough discussion. So what do you think? Did you hear what he said?
I want to know what you thought. You're the expert here.
I just sold everything 3 minutes ago.
Wow.
And I followed Gabe into shorting it.
Wow, that's the right move. They're expanding into too many countries in Europe. You got to do that.
Yeah. No, well, look. At the end of the day, we didn't know the answer to our
unshare the screen, Sally. So it's just you and me.
Yeah, hold on. Okay. At the end of the day, we didn't know the answer to our interest rates affecting their business. I think now we know interest rates are affecting their business. It wasn't the same in like Q4,
Right.
So this is either an opportunity for you or you think you're a smart ass bear and you're right. And we even talked about this. So I hear people saying, oh, Gabe must be happy and you guys are wrong and he's right short term. We were saying this yesterday. We were talking about that this is a possibility and it doesn't matter that if the thesis is intact, that they're still growing, which she says we are still growing. And as soon as the interest rate environment changes, I think he put it in those kinds of, Badri said this, that we are off to the moon. He didn't put it this way, but he basically said that. He said demand will increase. And the way he says it, he downplays what he knows is coming. He knows the avalanche is coming, but he can't say that, because he's a good lad. So I think in the interim, you don't need to rush and buy Enphase right now, even though I just bought 100 shares in the last hour.
Really? Why'd you buy 100 shares? Why? What was the reason?
I just look at what is happening in the future, and I look at the current price, and I'm also looking at the statistics of the chart. So I'll show you some of those things. And it's like, yes, the growth will slow. This year it's slowing. That's what it's coming out to be. Because even if it's a little bit better in Q2, as he said, I mean, what is that? Because it was pretty bad quarter over quarter. Year over year is going to work itself out. If you look at the year, that's pretty good. But quarter over quarter, it might not be great. So it might be like, I don't know. What is he talking about? 10% growth? Like low double digits? I don't know what he means by it's going to be better in Q2. So if it stays around 10% growth, we still have at the end of the year, maybe it picks up. We still have our 30% plus growth, right? If it picks up. And if it doesn't, then you know what? Gabe called it. We're going down to zero growth.
Right.
So he could be right about this in the interim. But are you asking me if I'm worried? I'm not worried. And let me give you why I'm not worried. Well, first of all, I sold at 300, so I want it back. Step one, I want my shares back that I sold. Remember we talked about this?
Yeah.
So I want to buy those back. That's another reason I'm buying. But I took down some notes. Yeah. So why is it going down? EPS is weaker than I think expected, even though they have a release that says they beat. If you look at the averages, I think their EPS is slightly lower than maybe the average of the EPS is expected. The rates are having a material effect. I wrote that down. but Europe is growing faster than the US. And so Europe, I think he's basically telling us Europe is still on the course to around 100% year-over-year growth, 25% this quarter. And if it's going to get better in the next few quarters, I think we're still at 100% European growth, but US is killing us. That's what it seems like because of the rates. I'm not sure why that's not affecting Europe as much, so I have to look into that. The one major thing he says is he's ramping up to 10 million quarter-over-quarter micros, which equates to 40 million micros a year, right? So that's what was in the beginning of the call. So if that's happening, if you're ramping towards that amount, I'm not sure if they're going to hit all the way to 40, but he's saying he's ramping that far. Like, why are you ramping? Why are you doubling production basically from around 20 million to 40 million? There's got to be a reason you're doing this. So
this is for the microinverters?
This is just the mic, right? Well, the microinverters are also in the batteries, by the way. So the way they sell the batteries, it's in the batteries. Either way, I don't care how they sell a microinverter in the battery or on the roof. They're selling a microinverter and they're charging you for it, right?
You want pull up DK's comment? That's a really interesting comment right here.
This one?
No, the first one. He says, I'm an installer in California, one before that. Interest rates are affecting the business a very small amount. Instead of solar system payments being 50% of your regular utility, it might be 55%. So even at a 10% interest rate, it's an unbelievable deal.
And it is. I think we talked about this, and people see that the problem is the bears are right in the interim that people don't do math, right? So even now I'm looking at what's the return on investments, and correct me if I'm wrong, DK, but it's still around 12%. It was 15% maybe a month ago or 2 months ago, but with rates coming up, it's now like 12% return. Not counting when you pay off the solar system, what is that return when it's just free energy? That's like an infinite return. Not counting that. I'm just talking about like the 12% annualized return. So I do want to share this screen real quick. Hold on. Let me see if I can find it.
I don't know if we see 170s tomorrow like people are saying. I mean, we could, but I think it could get gobbled up and be right back at 195 too. Where is that? We're at 184 right now.
Hold on a sec. That's not the screen, but give me a sec. I have some link here. This one, share this tab. Do you see this?
Yeah.
So I mean, this is a big deal. So if you have bad credit, you could be paying, I guess, up to 20% in interest if you're trying to install a solar system, which I would say don't do, honestly. So if you got good credit, maybe you're paying closer to 9, 10, 11, 12, which then it becomes like, a math problem for you to figure out if you should do this. So this is the issue right now. And I agree that in the interim, this is a problem. And Badri's basically saying it's a problem. I'm going to stop sharing that. So now let me take off that comment too. Well, I'm glad he's not seeing. Yeah, go ahead.
What else did he say in the call that kind of tickled your wickle?
Well, look, I think the main takeaway that I've gotten, and I didn't hear everything, and I have to go over it again, but the interest rates are affecting them. Their quarter-over-quarter numbers dropped. That's what it seems like. Quarter two is going to be incrementally better. The one saving grace is that Q1, this is winter, right? Or winter in the United States, that it's possible that we actually return back to the growth we expect in Q3 and Q4 as the summer months are happening and solar picks up and installers get more work. But having said that, once again, if the rates aren't low enough, I think we're still going to see this issue continue, that we're not going to get back to our 70% year-over-year growth. So that's what I took away from it. That this year is a clusterfuck for Enphase. It's a clusterfuck for Tesla. Anyone in that sort of industry of growth, you're going to have to deal with this until you get past it. So that's the bear case. The bull case is what's going on with the other companies that aren't Enphase. SolarEdge, like their call is May 2nd or something. Are they crushed? While Enphase makes a profit, what's happening with SolarEdge? I'm curious.
Are they profitable, SolarEdge?
They are, but what's happening now? If the rates are affecting Enphase, will they affect SolarEdge the same? So I'm curious to see what happens there. And what happens to all those little players that nobody talks about, the third and the fourth party players? How are they even going to sell their systems if the rates are crushing bigger companies that can afford to handle it? Because they're vertically integrated, as you heard. Badri has all these things happening. So these are interesting questions, but it doesn't mean Enphase won't suffer. It just means like in the bad times, who are the winners? Like right now, Tesla's lowering their prices. Who's the winner? Is GM the winner?
Right.
Or is Tesla going to be the winner because they're still making a profit on these things?
Right.
So it's the same thing. That I didn't consider this like a super positive call, by the way, but I've heard the positives for me are like, you're still growing. You're going to 40 million micros. That means you're planning to sell them at some point, even though you're not selling them today. So I took that away from the call. What about you?
What did the stuff they said about Europe, about they're expanding to different countries? The difference between Europe and America are the rates, right?
Yeah, I don't know what the difference in rates are. If someone's from Europe, maybe they can tell us. Because here it's 10%, 12% you're paying for a solar install, approximately. So what are you paying in Europe that it's still growing? Maybe their energy costs are way more expensive.
Right. Yeah, it was interesting. He was just saying that we're super excited. There's a lot of different countries we're attacking. This idea of 2023 being the year of new products, that is something I did not know Enphase was scaling up for in 2023. And
well, batteries. So Enphase is not just a microinverter company, and it's definitely not a solar panel company. So people get that confused all the time. Batteries are big business. They're going to be much bigger. If you're going to get a solar system and an EV car, eventually you're going to buy a battery. Yep. So the customer's in the queue. He doesn't know when he's going to get it. Even me, I don't have batteries. I'm in the queue of like, I know eventually I'm going to be buying it. And I'm probably going to be buying Enphase batteries if it works well with my system, as he was talking about the whole integration, right? They have chargers. They have software for, yes, definitely 69 likes is great, but give us more likes. Let's get to 79 and subscribe if you haven't. So if we're getting the battery business, the charger business, and if you didn't listen closely, the installers have software that they're using because Enphase provides the whole vertical stack. So when people talk about competition and everything, yeah, maybe you can compete with a microinverter, but do you have everything Enphase has to build into your system? Plus, he mentioned something a lot of people don't pay attention to: the calls. When you call Enphase, you get someone on the phone with like a minute or two, and you can solve your problem. So he's saying installers are coming around to understanding the value proposition, even if it's an slightly expensive product. And we talk to installers, and the main thing installers say, maybe DK can, if he's an installer, they don't want to have a truck roll. They don't want to send a truck to deal with a customer that already paid them the money to go fix a problem with like a solar edge system because your inverter went down and your whole thing is done. So it's not saying that Enphase will never have a problem, but it's not an emergency when one panel goes down of a microinverter. It's not the same emergency. You have 30 other panels producing electricity. You can put you on the queue. Enphase sends you the inverter to the installer, and then he can install it on his time when he's not on important work and losing money, basically, right? So I think people are becoming smarter about this, but it's 3% penetration. They're not geniuses yet about it. I think this is going to take time. So we're in the lull. Well, this year might be a lull for these growth companies, including Enphase.
Okay. I mean, look, I'm in it with you now, so I got a DCA. We'll see.
You didn't sell? You should have sold at 220.
No, I didn't sell. Look, I also I don't want to have the mental, stress of worrying about when to sell, when to buy. Like at the end of the day, if I like the company, I like the company, and I'm going to keep the company. You know. But
that's good because we're not traders. This is what we could keep going back to. That I'm not trading out of Enphase. I want to keep it because I think it's going to change my life.
Right.
I don't think 20% is going to change my life when it goes up. Do you know what I mean? Right. We can end the call soon, but let me just show you or answer some questions, whatever we want to do. But let me show you the Enphase chart. If they are to continue their growth, because obviously maybe they won't continue their growth. This year I'm talking about. All right, so I'm going to share this.
I don't know, man. I really don't think this touches 161. I think it gets gobbled. That earnings call was not as bad as I think people think. Let's see your TA analysis, but I don't know if it falls that badly tomorrow.
Well, the reason I bought it is because I'm still on the side that Enphase's growth over the next 5 years to decade, nothing has changed, right? If rates are high, 12%, 14% does for solar, meaning to get solar, at some point they fall. Do you agree on that or no?
100%. Yeah.
Yeah. So at some point, I don't know if it's this year, maybe it's next year.
I mean, we're going to get inflation at 3% by December. That's happening. That's happening. Right.
Yeah. I actually believe, I agree with you. Inflation is falling down. In fact, deflation is a big problem, not stagnation like Gabe was talking about yesterday. We have a problem with deflation, AI, solar, energy, all of this taking away, like we keep going back to it. It's bad for a lot of industries that this is happening. Not for the investors.
Yes,
but
it's bad for people with jobs in those industries as well, but it's not bad for the companies themselves.
Right, like all the oil and the coal and the natural gas. And imagine all the truckers transporting gas back and forth. That's all they do all day. They transport gas from A to B. What happens when that goes away, right? So, this is my chart. I've been following this for 4 years now, at least. Okay. And Enphase is in this clear channel. I keep talking about it. And we're, like right now, where do we at? 180? 184, whatever, somewhere around here. This blue line is like technically my bottom. And if we fall out of the bottom, dude, next stop is $133.
The bottom is what price?
So it's in this clear channel, in this trend, right? You see this blue line here? Is it obvious?
Yep.
Should I increase it a little bit?
No, we see it.
All right. If it falls down here and it breaks through to the 175s, it goes lower than that. And it doesn't just wick. I'm not just talking about a wick and it goes back, gets bought up back to the line. I'm saying if we're under here and we're there for days, I think the next level is 133. And if we break 133, I've said this long ago, even too, that we're back at around $110. Okay. This is all possible. I've never said this was impossible. This is all possible. It could happen. Because look, if growth companies get smashed, they get smashed. That's it. But at this price, Enphase is worth, their PE drops to under 20, and they're probably worth 15 billion, 10 billion.
Less than that, yeah.
Yeah, let's say they're worth 10 to 15 billion. If you don't see opportunity in that, I mean, what can I tell you? It's like the Meta opportunity. Remember that happened?
Yeah.
If you don't see opportunity, you're not going to buy. Like I have people on Discord right now talking about how they're not buying. They're waiting for whatever happens. So I see opportunity right now. If it goes to 130, 110, I'm still going to buy because I'm converting my dividends at this point as it drops to Enphase. So that's always been my plan for like the last year.
Well, yeah, I mean, look, I want to see what the market reacts to it tomorrow. I don't think it's going to be that dramatic, but we'll be buying a little bit tomorrow, DCAing, and yeah.
Yeah. Do you want to answer questions or no? We do a different podcast tonight. Maybe we do that tonight. How about that?
Yeah, we have plenty of time. I mean, there's going to be so many questions tonight. We got Google, Microsoft. We didn't even talk about them. They put up really good earnings or decent earnings, enough for the market to not crash. So there's a lot to talk about tonight on Finance Junkies.
All right, guys. So I know you had questions and you probably put something. Just meet us tonight. That's the way we get
or
you to
join Vitaly's Discord. There's Enphase conversations 24/7. So Vitaly, you should put that in the chat again.
I will.
And yeah, where there's I'm in the Discord, constantly talking about Enphase, shitting on Palantir, all that stuff. Market overall had a really interesting day today. I mean, a lot of things fell. There were some pockets of sunshine. Spotify had earnings. They were up a bit, but then they fell a little bit after. And Microsoft and Google killed it, but I don't know if it's enough for them to sustain. I mean, the reason Google's really up is because they're buying $70 billion of that stock. I mean, that's the actual reason they're up right now.
Well, let's talk about it tonight because they're continuing to buy stock, not stopping.
Yes, that is true. That is true.
Okay. All right. I will see you guys, I guess, at 10 p.m., right?
10 p.m. See you guys at 10 p.m.
on Amit's channel, though. So remember that. All right.
Like and subscribe on this one. See you at 10 p.m., guys. Thank you.